Today I would like to analyze Novo Nordisk, one of the largest pharmaceutical companies in the world and one of the worst performing stocks in the last few days. The stock price is down around 29%. So the reason for that is they cut the full year guidance and they also fired the CEO. So let's take a look at the full year guidance. So right now they're expecting the annual operating profit growth around 10 to 16%, and before they expected around 16 to 24%. So yes, this is a negative news, but I also think they're still growing at a good rate. 10 to 16% is still very good in my opinion, and it's not a huge difference as well. So I think this reaction around 29% stock price drop is probably too much dramatic. And I also think that they fire the CEO can be a positive news as well, so they will change something about the management. So let's take a look at the financials to find out if this company is undervalued right now. The first thing we can recognize is a market cap of 239.49 billion US dollar. So this makes Novo Nordisk the fifth largest pharmaceutical company in the world by the market cap. We also have a dividend yield of around 3.56%, which we can see here did grow in a very good rate in the last 10 years. So this is something we like to see as well. Now we're going to take a look at the financials. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining business. So in 2020, the revenue was around 126 billion Danish crowns. This was a decent growth rate, around 4% from 2019. In 2021, we saw the good growth rate around 11%. In 2022, we saw the very good growth rate around 25%. Then in 2023, we saw the strong growth around 31%. And then again in 2024, the good growth rate around 25%. So I would say in the last 5 years, we saw the very good revenue growth, so it's a check here. The next thing we're looking for is the free cash flow growth in the last 5 years. The free cash flow is very important because it can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. So in 2020, the free cash flow was around 46 billion Danish crowns. This was a very good growth rate, around 21% from 2019. In 2021, we saw the decent growth around 5%. In 2022, we saw the strong growth rate around 37%. Then in 2023, around 24% is also very good. And then in 2024, we saw the decline around 11%. This is something we don't like to see, but overall in the last 5 years, we saw the very good growth rate, so it's also a check here. The next thing we're looking for is a free cash flow yield over 4%. So this can also tell us about the valuation of this company. The higher the free cash flow yield, the higher the indication for undervaluation. So we're going to take the free cash flow from 2024. This is around 73.8 billion. We're going to divide it with a market cap, 1,562.8. And then we're going to get the free cash flow yield for 2024. So the number we're going to get would be around 4.72%. And I think this is a good free cash flow yield. It's over the 4% that we're looking for. And I also think they can grow the free cash flow in the future as well. So let's take a look at the future assumptions about the free cash flow. In 2025 is expected around 38 billion. In 2026 around 85 billion. And in 2027 around 112 billion. So I would assume for 2027 around 100 billion Danish crowns. So let's take this number. Then we're going to divide it with the current market cap, 1,562.8 billion. And then we're going to get a free cash flow yield for 2027 with our free cash flow assumptions. So the number we're going to get would be around 6.39%. And that's a very good free cash flow yield actually. It would also be a check here for 2027. And this is something we like to see. The next thing we're looking for is a debt to free cash flow ratio under 5. This means the company can repay the debt with a free cash flow in under 5 years. A very important number, because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So first we're going to take a look at the long-term debt. This is around 84 billion. Then we're going to add the short-term debt as well. So this is around 11.8 billion. Then we're going to divide it with the current free cash flow, 73.8. And then we're going to get the ratio that we're looking for. So the number we're going to get would be around 1.29. And that's a very good number actually. It means a little bit over 1 year we can repay the debt with a free cash flow. So the check here, and we like to see that. We can also take a look at the cash on hand, how much money this company has in the bank, and we can see here around 26 billion Danish crowns. And I think that's also a very good number as well. So overall, I think this company has a very good balance sheet. The next thing we're looking for is the enterprise valuation to free cash flow ratio under 25. So this can also tell us about the valuation of this company. So lower the number gets, the higher the indication for undervaluation. So we want to see a low number here. First, we're going to calculate the enterprise valuation. This is the current market cap, 1,562.8. We're going to add the debt as well. This is around 95.8 billion. We're going to take minus the cash, 26.31. And then we're going to get the enterprise valuation. So how much the whole company is worth. So the number we're going to get would be around 1,632.29. So now we're going to divide this number with the current free cash flow. So the current free cash flow is 73.8. And then we're going to get the ratio that we're looking for. So the number we're going to get would be around 22.11. And that's a good number as well, I would say. It's under the 25 that we're looking for, so the check here. We can also calculate this number for 2027 with the free cash flow assumptions that we had. So 100 billion. Then we're going to get a different number. So the number we're going to get would be around 16.32. And again, a very good number actually is under the 25, so it would also be a check here. And I think it's already indication that this company could be fair valued or even undervalued right now. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We like to see that, especially if we think the company is undervalued. And we can see here repurchase of common stocks. And yes, this company buys back their own shares, and I think also in a good rate. So we like to see that it can help the stock price to increase as well. And I think they can also afford it because they have a good balance sheet. So the check here for me. Can Novo Nordisk stock be a good buy right now? The stock price is down around 29% in not many days. So let's start with a positive about this company. I think they had a good revenue growth in the last 5 years. I also think they had a great free cash flow growth as well. And this is something I really like to see. The balance sheet is also looking very good. So we have a low amount of debt and a good amount of cash on hand. The free cash flow yield around 4.72% is also looking quite good because they had a very good free cash flow growth rate. And 2027 with our free cash flow assumptions, the free cash flow yield could be around 6.39%, which would look even better. And the enterprise valuation to free cash flow ratio around 22.11 is also quite good. It could be an indication for a fair valuation. And in 2027 with our free cash flow assumptions, this number could be around 16.32, and that's also very good. We want to see that number under 25. So overall, I think this company does look undervalued, and I also think the market reaction is over dramatic. What I also like about this company is they have stock buybacks, and I think this can help the stock price to increase as well. So overall, I think this company could be a good buy right now. I see huge potential in the stock price and in this company. Some months ago, we also saw a comeback with a return rate around 40% in not many months. So I think this company can do it again. What we also need to consider is that pharmaceutical companies are more risky as well, because they always can get sued from consumer and from other companies, and they can also face regulation from the government. So we need to keep this in mind as well. But right now, I think this company has a huge potential. If you found this video helpful, don't forget to like and comment and subscribe for more content.